The Nasdaq 100 did hold on to the 12,180 resistance level, which was called out in our last video. I mentioned that if price did hold this level, we could see 11,688 quite quickly. And that also occurred on Tuesday, as you can see here in the daily chart. Then we had the main event on Wednesday, US inflation numbers, and they didn't disappoint. US CPI for June came in higher than expected at 9.1% year on year, above expectations of 8.8%. Immediately equities began to sell off following the news. Price did dip below the 11,688 support level, but managed to close above it by the end of the trading session. This could be driven by the fact that although the headline CPI number came in higher than expected, core CPI, which excludes food and energy prices, came in at 5.9%, which as you can see from this chart has actually fallen slightly. At this point, the market will take any kind of good news, and any kind of slight dip in inflation is welcome news for markets. German CPI numbers came out the same day, which matched analysts' expectations of 8.2%. However, if we drill further into this number, we can see that food price inflation is at 12.7% year on year, the highest level since the start of this statistic. Inflation is a problem everywhere, not just the US. The Fed funds futures market has now priced in as much as 100 basis point rate hike in this month's Fed meeting following the inflation report. And it's not surprising banks have been coming out forecasting recessions recently. Bank of America has come out and said the US is likely to fall into a mild recession this year. If central banks are required to raise rates in order to bring inflation down, economies will tip into a recession, which is defined as 2 negative quarters of GDP. On the earnings front, bank earnings kicked off this week with JP Morgan, Morgan Stanley and Wells Fargo all missing analyst expectations, with JP Morgan CEO providing warnings on the US economy. Only Citigroup beat out of the big four banks that reported this week. On Thursday, we had US producer prices coming in, showing an increase of 11.3% in June from a year ago, which again was above estimates of 10.7%. The same thing happened with the Nasdaq 100, selling off on the news before recovering again, closing above the key 11,688 level. I've said it before and I'll say it again. That 11,688 level is massive, and the whole week's trading has been based solely around that level, as you can see here in the daily chart. If price closes below that level, that will give encouragement to bears and more sellers will come in. In terms of looking ahead, earnings will continue to be the focus, and it will be the forward-looking statements and the forecasts that will dictate sentiment. More recently, the CEO of ServiceNow, which is a tech company, said that no tech firm will be able to outrun the strength of the US dollar, which suggests global US corporations are likely to see a hit in revenue if the USD remains as strong as it has been. And that again is a result of market expectations of where rates will be due to rising inflation. You can see from this chart the dollar index making a multi-year high. If the dollar does cool off, we will see risk assets bounce. So this is a chart worth keeping an eye on. I do think the USD, which has been on a strong run, will run out of steam, and that'll help equities and the broader market. In terms of levels to watch on the Nasdaq 100 next week, 12,180 remains the resistance level to watch. Above that, and price heads towards 12,520, followed by 12,800. Whilst 11,688 remains the key support level, if price did break below 11,450 followed by 11,320 to 335 are the next areas of support. With that said, thank you for watching and do hit that subscribe button so you don't miss out on future content. And I'll see you at the next one.